Welcome back, ladies and gentlemen. Market Talk continues today. We're going to have a conversation about input prices. Joining me for this next segment is Josh Linville, Vice President of Fertilizer over at StoneX. Mr. Linville, thanks so much for jumping on today.
Anytime, man.
Let's talk about what's happening here in the fertilizer markets. Fill us in. Over the past couple of weeks, we've seen crude oil prices start to gyrate some more. We've seen the dollar value climb and drop and do all of those sorts of things. What are the big trends right now in fertilizer?
Right now, so again, you know how we always do, right? We like to look at the world. We like to look at what's going on here at home. Globally, a lot of great signs. Values are falling. We got nitrogen prices that have been under pressure. Phosphate values have been under pressure. Potash has gone back to potash. Nothing happens in that market. But the thing that I think is probably getting under the skin of a lot of the listeners is that, well, that's great. I don't see that here at home. And that's because we're in kind of that magic period of the calendar where we typically want to look at the world and say, what's coming? What's the trend? This time of year, unfortunately, it's too little too late for the rest of the world. We're now set in a position where kind of what we have in place is what we have in place. And that's still a little bit on the higher price side.
Gotcha. But we do have things in place. And Josh, I know that you're in the Missouri. You've watched the weather trends here across the Midwest. It's been wet. It's keeping folks out of the field. Is that helping extend the stocks that we do have on hand, keeping these higher priced nitrogen supplies around a little longer?
Yes, but it's also going to help. Because from one point, had we been on time, we were playing from behind the eight ball, right? We were very tight on supplies. We were playing catch up. And now all of a sudden, because we delayed this planting, that also delays that side dress nitrogen demand. That gives us more time to get these imports from around the world. It gives us more time to move those imports or those produced tons into the marketplace and in place for when those farmers are ready to roll. So from that standpoint, it's actually been a little bit more of a help. I know, obviously, we'd love to have the crop in the ground and not have to worry about it, but it is, I guess, a silver lining, if you will.
All right. You mentioned running behind. I know in your most recent fertilizer update, Josh, you talked about how urea purchases had been behind as well. Now that we've got this trade data out there, what else are you seeing?
Actually, we're doing pretty well. So the U.S. doesn't release its import-export trade data for 60 days. That's just the way that it works. Other nations around the world only do it within 30 days. I don't know why the U.S. doesn't think it can do the same thing. It is what it is. It's a system that we have.
Right.
It's not perfect, but we got our information from March, right? And based on that, based on what we believe we need for urea imports, 5 million ton is our finish line. Based on what we've gotten through March, what we believe we'll get in June, because that's kind of a toss month, April and May only need to average about 625,000 ton. Now, that's a big number, right? That's a lot of tons, Josh. That's 1.2, 1.3 million ton. But when you think about it, I mean, we've had those months before where we've brought in over 1 million ton just one of the months. And you look at the world, it's been very slow demand periods. You've seen prices that have been falling. You've seen people growing unsold inventories. The U.S. and North America were one of the last few places you could send product and know that there was going to be a buyer. So we're expecting April to be a pretty hefty month, and May doesn't need to be big. And if it is, that might be carryover into next year and kind of help lower those price ideas even more.
Yeah, I mean, Josh, as I listen to you describe the setup happening right now in the fertilizer industry, it sounds like, and I don't want to get too far over the skis, but next year you might be anticipating, at least on the nitrogen side, some pretty big.
Yeah,
now things are kind of the only buyer in the global world right now.
Yeah, we're not even in that demand period. It's gotten very, very quiet out there. Not a whole lot going on, and this is when we start to set those low prices. So the fact that we've already dropped prices like we have just means it's going to be hopefully that much more.
All right. And do you have any timelines, given how this thing is shaking out so far, as to when producers ought to be getting in there, maybe getting some things priced out?
That's a conversation to be had with every retailer out there, because everybody's going to be different. But I will say some of the numbers that we are seeing for the summer months, they are looking very, very attractive versus those December 25 corn prices. So I will say, I know a lot of people are very reluctant to buy product early, sell product early. There's always a lot of danger with that, but that's where the opportunity seems to be. We're seeing some ratios, that corn to urea ratio, that we haven't seen for a while. It's, historically speaking, very attractive out there.
Okay. All right. Are you encouraging folks, given the ratios, to secure needs any farther out, or are you going to let this market come to us year after year?
It's one of those things, the value, that's the great thing about the ratio, right? It focuses less on the flat price. Right. And my biggest fear is, so I'm looking at urea prices today. In the Gulf of Mexico, summer months are looking about $275. Now, I think that it's going to reset lower than that, 25, 35 bucks a ton lower than that. So why would we do that today? Well, it's because today, got December 25 corn at 490. I'm not so sure it's going to be that high by the time we get there. So you may wait on your urea and say, oh, I got it 25 bucks a ton cheaper. That's great. I sure hope corn didn't fall to 450 at the same time.
That's a great point, because you've got to look at both the numerator and the denominator in that equation. That's a great point, Josh. I'm glad you brought that up. I want to turn. Politics, Josh, certainly always plays at least some part here in the fertilizer industry. We've seen tariffs come back on the scene here in the phosphate industry. Morocco, big 12%, I think, tariff jump is what you'd reported. What's this going to do? What's the impact for the producer of a 12% tariff jump on phosphates out of Morocco?
Yeah, and that was an extremely disappointing situation. We just went through a fall, winter, spring cycle where product was very, very tight. We saw MAP at a triple-digit premium to DAP. We struggled to get supplies in place. It was a lot of issues. Now, unfortunately, it doesn't really change anything. Whether it was 2% or whether it's 14%, it's a rate that they are going to be unwilling to send product here. So it doesn't really fundamentally change anything. Emotionally, though, it does impact the market, because now people who might have been sitting there thinking Morocco's coming back, I was one of them. I was very hopeful. Now I have to sit there and say, rats. We've now lost 3 of our largest global exporters because of these duties.
Oh, wow. So Morocco being one. I know Russia's got duties. What's the third largest exporter?
China. And those duties were imposed back during the Trump administration, and those have been around for a while.
Oh, man. So where do you see it going from here? I mean, what's the uptake? What's the phosphate source going to be if we're not importing from any of these? Canadian?
Number one is Saudi Arabia. Saudi Arabia, and that's the thing, is Saudi Arabia was never included. They are one of the top 5 global exporters out there, but one of our biggest manufacturers here domestically. Well, they had 25% ownership in that facility in Saudi Arabia, so they weren't included in these duties. It does sound like they are selling that ownership, but still, it's kind of one of those things. Draw the lines there. We always kind of chuckle a little bit about it just to keep from screaming.
Yeah.
But outside of that, honestly, we have seen an influx from a lot of these small countries around the world, because as the U.S., as the NOLA, New Orleans, Louisiana price moves to a premium, all the rest of those nations are sitting there saying, why would I go compete with big boys like China, Morocco, Russia? I can go to the U.S. That's great credit. They pay their bills, and it's a premium. And we've seen our for this fertilizer year, since July 1, our imports have been above the 3-year average pretty decently.
Okay.
Markets find a way.
We've got, exactly. The markets find a way. We've got sources out there with these out of the market. Yeah. Any chance, I know you mentioned that Morocco thing. We've been back and forth on those tariff levels for a couple of years. As China, the steel, the tariffs, all the stuff there, Russia. Any chance any of these tariffs come off in the short term, before the election?
I have hoped and hoped and hoped, with it being an election year, with still somewhat tight races, with so many farmer votes out there, I was really hoping something would happen.
Yeah, but politics is politics.
I know. I'm losing that faith. And in fact, one of the things we're actually starting to get worried about, we have been a major receiver of Russian-produced fertilizers across the board, nitrogen, phosphate, and potash. There's getting to be certain parties who are sitting there saying, why would we bring in those products? That is funding the war effort against Ukraine, who we are funding to help fight against. That's something we also need to watch out, because if all of a sudden that becomes the political story in DC, that would be very detrimental. You talk about needing to reestablish new supply routes. That would be rough.
Do you know offhand, Josh, a rough estimate of how many tons are coming from Russia now? Like what the size of that change could be?
Oh, it depends on the different products. I wouldn't have a good one. I can tell you, give UAN for an example. They are the single biggest importer. And for this fertilizer year, almost every ton that we have exported around the world, we've imported the same ton from Russia. So if all of a sudden we lost that Russian inflow, now all of a sudden we're still able to export things. Now we have to pay the price everybody else is willing to pay, who's in a desperate situation.
Things can happen here, Josh. Things are in elevated areas. Given that risk out there, any advice to producers here this year, watching commodity prices come down, realizing that risk is floating out there?
This is going to be a tough one to say, and I don't want people getting upset by me, because this is a situation. I know a lot of farmers are sitting there saying my economics for 24 and 25 don't look great. It's not like it's been in the last few years. It's not like everybody's swimming in cash, but it's better than where we're at today. But don't get scared of taking a profitable opportunity. If you see a chance where you can lock in some profits, at least on a layer, don't be worried about it. What my biggest fear is that we have an opportunity. Take this ratio we're talking about for the summer. Well, let's say it's a 55 ratio. Well, I like that, but I'm going to hold out for 54. I've had some trades in my life where if I had just, bit the bullet and said, this is good enough, I'll take it. I gave that money back real fast.
Yeah, that's true. That's
Yeah.
true. And as you mentioned, if you're pricing things off the ratio and you're buying fertilizer because of the ratio, you probably ought to be selling that grain because of the ratio as well.
At the end of the day, you strip away everything that farmers do, and it's a lot. It's a laundry list. Yeah. But at the absolute basics of the business side of it, it's nothing but inputs and outputs.
Manage them carefully. That's what the name of the game is.
That's right.
Josh Linville, thanks so much for talking to us today. Vice President of Fertilizer over at StoneX. We always appreciate your insight on such a fascinating global industry, Josh.
It's keeping me in the job. There's plenty of stuff going on.
That is so true. Plenty of job security. Folks, leave it here. We're going to have more market talk coming up when we return.